Good evening, ladies and gentlemen. This is Clueless 8, Frank, and this is the end of the day report for another monumental day for October 5th, 2015. Losing track of time here. Let me get straight to the point here, which is something very, very important for every single member and Clueless 8 free trial subscriber to understand. I am inherently a bull because, simply speaking, the ascent of mankind, okay, the trajectory of mankind has been a bull market. In other words, I don't think things are just going to just melt a month from now or 2 months from now, and all that heavy duty, hardcore, bearish talk that comes about every time that we have a corrective pullback. Saying all that, I am a tactical bear. What does that mean? It simply means that I do believe there are times when the market needs to have corrective pullbacks. And corrective pullbacks can be anywhere from 5% to 10% to 20%. I don't think it goes beyond that. I do not believe we're in a bear market, but I do believe that things get overheated at times and you got to react accordingly. I also believe that things get what's the word I'm looking for? Frozen at times when the Dow falls 3,000 points from the top and they're talking about another 2,000 points right away. It doesn't work like that. Even in the worst bear markets back in 2008, and back in the early 2000s, 2002, 2001, it didn't happen in a straight line. You get straight line, then you get massive pull-ups, not pullbacks, pull-ups up. You test the 50, 34-day moving averages. You fail, you move down. You don't realize you're in a bear market till it's over. No one tells you that, right? So let me show you what's going on here. Because at this point, I'm a tactical bear. Made some extremely decent money, to say the least. And not to say I don't have any long positions. I certainly have the long positions, and I've highlighted a few of them. Twitter is one of them. But when I'm calling the shots on win and it's up 25% in 24 hours, and I'm calling the shots on Netflix and Amazon and a whole bunch of other stuff that I mentioned, okay, Priceline, and they're up 30, 40, Priceline in the case, like up $45 or $50 from where I called it. You gotta use your common sense. Common sense doesn't always relate to market profits, but I'll tell you one thing, and I want to remind everyone this. I am always 24 to 48 hours early on big macro moves. I was like that at the time I was buying at the lows, which yielded 600 to 700% on the weekly calls, and I'm going to be like that as I think we are going to come into a little bit of a mini pullback as we wind down the first 5 business days of October, which I mentioned repeatedly, is when the pension and the institutional funds put their money in the market. So for a bull to be somewhat short, for a lot of the new members, like, whoa, what's going on here? People who have known me, they know very well the way I'm thinking. This is never a straight line up. You go straight line, you pull back 10, you pull back a couple of percentage points, then you move from there. I still believe that October is going to turn out to be a good month as far as I can see. But what do I know? Let me react to what's happening here. I will tell you that the ferocity of the move, that we are up almost 700 plus points from the lows of Friday, is overbought conditions. No question about it. Now, people might say, whoa, why did this happen? Well, it happened because a significant majority of the investment community, both institutional and retail, the ones who are still trading, were short. You couldn't turn on the TV, you couldn't turn on stock tweets, you couldn't turn on even the Clueless 8 chat rooms where everyone's like completely like, oh my God. The Clueless 8 chat room, thanks to my guidance, they're not maybe completely short because otherwise they'd be literally demolished right now. but they're just like, oh my God, this is so bad. I'm just going to sit on the sideline. They missed 99% of the rally on the way up. Guys, it's just the way it goes. I've been doing this long enough, okay? It's 8:53 or 8:54, whatever, Eastern Standard Time. So let me just get straight to it here. So these are the channels that I drew days ago, not months ago, days ago. So what the market did was around 1 o'clock, we entered the channel. We got to that 1980 on the E-minis. Okay? And now we are at the bottom of the Darvis at 1970. Let me not get too technical because the reality is it's about making money. This is what I see on the 1-hour chart. A pretty severe overbought conditions up here. Why did I draw this red line? Because back on at 2 p.m., I mean 2 in the morning actually, this is not 2 p.m. At 2 in the morning, the stochastics had corrected to this point. At this point with the open gap, now what do I mean by that? Let me get straight to the point here. Okay, this was that robotic channel that I kept on talking about back on, back around the first. The robotic selling thanks to Glencore. Anyway, forget that. So at this point, look at this. It's an open mouth stochastic crossover. So what does that mean? It simply means that over a very short term basis, over the next 24 to 48 hours, we are going to come down. Okay, maybe we're not going to come down here. Who knows? If we come down here, then those SPX puts, okay, those SPX puts are going to be up 400%. Again, just the way the SPX calls were up 700%. Okay, so from a tactical standpoint, what this is telling me, just so you all know, that we are going to pull back a little bit. Now we could turn from here, so I will take evasive action as necessary. All I know is that when I look at the daily chart of the S&P 500, okay, and let me get these channel stuff. Actually, I won't get the channel stuff out. This is, and all this has been talked about in the Friday, the free webinar that I did after the market. Extremely bullish. And then today. So now I'm tactically bearish. That's just the way things work. So looking at this, okay, we are at a inflection point where we can get up to the 50-day moving average, move up a little bit more, but we need a small corrective pullback. Now, why do we need a small corrective pullback? Let me just show that to you on the hourly chart. We need a small corrective pullback, just so you know, because the standard deviation from the yellow line right here, I know I sound like a complete robot, and the standard deviation from the 50 and the 34, which are looking fantastic, by the way, sloping up. We love it. We have a negative divergence, by the way. Look at that, sloping down on the stochastics. But, another thing that we have, wow, I sounded like a weirdo, is the fact that we have a McClellan oscillator, at least on the 1-hour basis, at 632. Unheard of. We want to buy the McClellan at 0. We want to buy the McClellan at minus 459, which is pretty much here. Okay, back around the end of September, when nobody wanted to touch the market. Nobody. Okay, or we want to touch the McClellan when we were at 135, or when we dropped and the false breakdown on the 2nd which was what, 2 days ago, 3 days ago, on Friday. I'm sorry, what am I talking about? On Friday, right? Look at that, stochastics all the way down here. So now that we get overbought, this is what boggles my mind. I don't blame it. I guess that's human nature. People are scared to buy some puts. Yes, we are underwater on the puts, on the hedges. So what? It's a technical discipline to understand that technicals will always be correct, regardless of what our emotional quotient is. In other words, what we think. Yet, I didn't say we, I've learned through the years, but most of you out there are now scared. I'm not going to say that, 4-letter word, that, oh my God, this market just, it's unbelievable. And then when I clean out my 300% on my SPX puts on a short-term basis, I'm going to get a slew of comments. Fantastic trade, great job. So why not you guys be with me on that trade? Because I know I'm doing well, both on the long side and the short side. I'm the one who basically said buy the market on Friday after the jobs report off that technical breakout. I rest my case. Futures are down 3.25. I'm not expecting calamity, okay? But the bottom line is, let's look at a 15-minute chart. I'm sticking to think or swim tonight because I want people to look at the technical stuff in a good way. Okay, so look at this. I'm just keeping. I just keep on zoning in. So at this point, forget technicals that definitely need to get oversold. This is a 15-minute chart. Okay, and I still believe that we come down to 1968 or so on the E-minis. So let me pull up the SPX, which is not trading after hours, by the way, right? So on the SPX, this is a negative divergence as we moved higher. This stochastic chart in no way or form is telling me that it's a positive divergence. Okay, so that's number one. Number two, McClellan oscillator. We went as high as 632. Whoa. I'm a numbers guy. So I'm just going with pure robotic numbers. 438, very high. We do need a reset. We do need a reset. So where is the reset? That's what you guys rely on me, right? And use your own discipline to make the money. I judge my P&L on a multi-day or a weekly basis. I don't judge it on a daily basis. Yes, sometimes I don't feel that good. Oh my God, I'm short biased. I sold my longs. By the way, I had a pretty damn good day given the fact that I sold most of my trading longs. Like they say, shooting fish in the barrel, right? As they're going higher, you just say, what price do I want to get out at? Let's sell it. Sell when you can, not when you have to. And unfortunately, most of you guys who are listening out there and gals sell when you're forced to. Sell when you can, not when you're forced to. Take advantage of the spikes, get back in, and tactically, we're in a intermediate bull. Let's work that way. We're overbought. So at this point, the SPX is obviously not trading after hours. I mean, E-minis are. So what am I looking at? So what I'm looking at, if you look back at the 4-hour, I drew a beautiful chart. It really is. So you have this nice channel right there, okay? We had a big channel breakout at around, right off the market. You can see that. And we hit the upper end of the Darvas and this particular line. What is this line? It's almost like a rising wedge, okay? It is a rising wedge. So guess what the rising wedge, and it just amazes me sometimes how these lines match. That's what I do, right? For a living. So take it for what it's worth. So um so this rising wedge, the lower end of the wedge is 1967 on the S&P, upper end of the wedge is 1990, pretty much where we got to today. Okay, and here's the downtrend line. We broke out of that downtrend line in a ferocious manner. Okay, that was the reversal on Friday. None of you guys expected it. I didn't expect it, but I acted on it. It was huge. It was huge.